Welcome. I am back once again, back like I never left. Here to do it for the people we love the most. The true definition of the people's champ. I do it for you. I do it for you. Are you struggling with your credit? Are you having problems trying to get that loan that you want to advance in life? Did you know that 30% of Americans have less than a 700 credit score? That means approximately 1 out of every 3 of us have poor to fair credit. Do you want to improve it? This is how we do it. One tidbit. I'm coming with another tidbit today to improve your credit score. This is the Credit Builder Loan. Very similar, well, not very similar, somewhat similar to the secured credit card that I spoke with in videos prior. The Credit Builder Loan gives the person with poor credit an opportunity to build their credit through a loan. So let me explain. Sorry about that. The Credit Builder Loan, what it does is it allows you to use the loan as a means to build your credit. For those with poor credit. You got poor credit, I'm talking to you. So how it works. Banks, credit unions, what they'll do is they'll allow you to bring in, for example, an amount of money. Let's say $2,000. Okay, let's make it an easy number so we can do the math very easily in our heads. $2,000. So you take your $2,000 into a bank or a credit union. Most banks will do credit building loans. I've done this personally myself. Again, this is why I know how it works. But you go in there and you speak with them in your bank and you want to let them know that you're trying to build your credit. And you want to do a credit builder loan. Okay? So what the bank does is they take that $2,000 and they put it in some sort of secured account. Most of the time it's in a CD, a certificate of deposit, or a secured savings account, okay? What they do is they charge you a very small percentage, interest percentage, to do this loan for you. And the reason why they're charging you is because you have bad credit, you have poor credit. So that's why you have to bring in the amount of money. It doesn't have to be $2,000. It could be $500. It could be $1,000. Most of them are from $500 to $2,000 because we know we're dealing with people who do not have their credit in check. Hence, they probably don't have a whole lot of extra money on the side. However, if you are good at paying on time and you get paid regularly, this loan is for you. So, as I was saying, the bank will take that $2,000 and put it in a secured account. All right? Now, what they do is they give you $2,000, but they have created a loan for you. All right? I know it can sound a little confusing. Just follow me here. So you take them your $2,000, they create your loan, they'll write their loan out anywhere from 6 months to 24 months. Most banks are willing to work with you on deciding how long the term is of the loan. So they're pretty flexible with that there. I'm just going to use 24 months for this particular instance because I use $2,000. We can make it pretty simple with the math, okay? So the banks will charge you interest on this loan. Most banks is around 5%, no more definitely than 10%, but most banks are around 5%. We're going to say somewhere in between that 5 to 10% range for this particular example. So they set you up a loan. They give you this money back. You go use the money for whatever you want to. In my case, I went and bought me a Lexus. I think this was maybe in 2010 or so, 15 years ago. I went and bought a used car with the money, okay? So I did it over 24 months. Let's say $2,000, 24 months. I think if you do 10%, you're talking about you owe $200. So over the 24 months, I have to pay off $2,200, okay? $2,200. Now keep in mind, they just gave me this $2,000 as a secured loan, a $2,000 that I give them that they put in a secured account. I'm going to explain to you why that $2,000 that you gave them is in a secured account. Stay with me here. So you go do whatever you want to with the money. Your loan payments are going to be monthly. So roughly 24 months, $2,200 is less than $200 a month, okay? 12 months in a year, 2 years, 24. You follow me with the math. So you're basically paying $200 per month to cover this loan. Once your loan is completely paid off at the end of those $24 months, once that loan is completely paid off, that $2,000 that you gave to the bank, they're going to give it back to you. So basically all they're doing is holding that $2,000 as collateral if you don't pay your loan. And they charge you a very small amount of interest. Now, you can wait and pay the loan off over 24 months. Hey, if you got the cash, you can pay it off in 6 months, 8 months. I would not suggest paying it off in anything less than 6 months because, again, as I've stated in previous videos, the bureaus want to see that you're going to pay on time, that you're going to pay monthly. Anybody that you owe, they just want to know business-wise. They just want to know that they're going to get paid every month, something that they do not have to worry about. When they sleep, they're going to get paid, okay? So that's what we call a credit building loan. This is for those who do not have good credit, who are trying to refurbish their credit, rebuild their credit, improve their credit score. This is a very good tidbit, a good tip to help you improve your credit score. If you're good with paying your bills on time, and if you have a consistent amount of payment, a consistent way of getting paid, whether it's weekly or bi-weekly, I highly suggest you tap into a credit builder loan. One way to help you, another way to help you improve your credit score. Again, follow me, join the YouTube channel. That's www.youtube.com/progress, the letter N, growth. Progress in growth. Follow, subscribe. Please subscribe to the YouTube channel. Hit that like button and share. Until next time, you know it. Stay focused, stay humble, stay hungry, stay ahead. I'm out.